Dan, important to go through a technical aspect that you and I have talked about. Sanctions aren't snapping back. They're being reimposed. Why is that language so significant?
Very important, and there's a lot of contention in different circles on this. If you say snapback, that assumes that the Iranians had violated the nuclear deal, which no one is actually saying. You hear that it's a bad deal, the worst deal ever, but it wasn't violated. Reimposition just kind of gives them the credit that they didn't actually violate the nuclear deal, which had a snapback provision should they have violated it.
I want to deal with some of the waivers that have been issued. Does that make a difference? How difficult is it to operate even with a waiver? So
the waivers, as we know, financing for these transactions with Iran, even after the Iran deal was announced, was extremely difficult. You'll expect central bank support for how you're financing the oil transactions. The other important thing to note is the money for these oil transactions for countries under waiver will go into an escrow account. So it's not that the Iranian government can immediately derive benefit from it. And I think that's really important to note for those that have been criticizing the administration on them caving. This has been designed in a way where the administration can apply pressure through withholding the money for transactions.
Dan, this is really interesting because what we had before was a multilateral agreement, the Joint Comprehensive Plan of Action. What we have now is a unilateral move to reimpose sanctions. Yet we still have to think about secondary sanctions in that environment. How are some of these countries still going to operate, and what will their relationships look like with Iran?
I spend more time out of the U.S. and Europe than in it these days, and I hear a lot of people grumbling and shaking their head because while this is a true unilateral sanctions package, all major foreign companies that operate in the U.S. know that they're going to have to comply with this in one form or another. The EU enacted anti-blocking measures to make it illegal for companies operating in the EU to comply with the U.S. sanctions on Iran, so you kind of have to choose. Enforcement historically in the U.S. has been significant, and that's really what's driving this. You can be fined upwards of $9 billion for violating these sanctions potentially. For secondary sanctions, it can basically cut an entire company out of the market. It can take an institution and essentially ban it from doing business in the U.S. It can put other measures in place to freeze assets in the U.S. So it can have an impact, but it has to be enforced, and enforcement is light this year.